Hello traders, it's Sunday evening, March 19th. Time for the Sunday night video. Let's start off with our most recent pick on Friday, ENPH. I did this recording about 30 minutes into the open. Really like the way that this short had set up. Here's the D1 chart. You can see that there are many low minus trend lines that are currently being breached. There's a beautiful longer term low plus trend line breach. Stock is below all the major moving averages. Let's take a look at that M5. And in fact, when I did the video, the market was also breaking down. So we had that market tailwind working in our favor. Look at that drop. That was a beauty. And the video was recorded right about here. This is where I was saying, yes, I would be short the market. Specifically, I would like to be short this stock. You can see it fell from about $190 to $182. Really nice trade. Never got off the deck. Even with the market bouncing later in the day, stock had a lid on it for sure. So we're going to take a look at another potential short. Maybe we'll take a look at another long. The reason that we have to be balanced is because the market is not doing a whole lot. It's back and forth around the 100-day and 200-day moving average. You can see on Friday we sold off and then we spent the majority of the day in a relatively tight trading range. Go into the D1 chart, take a look at where those major moving averages come into play, and we'll put those up. We can see that the 200-day and the 100-day are almost one and the same. And so this is our primary support and resistance level. Right now the market is trading between roughly 392.50 and 395. We have the FOMC meeting coming up this week. That is going to be the big news. That comes out Wednesday. Everybody's going to be waiting to hear what the Fed says. Are they going to be more dovish now that we have had a bank failure, which, by the way, it looks like UBS is going to be buying Credit Suisse. Both Swiss banks. Important to note that Switzerland is not part of the ECB or the EU. They are a banking country. Pretty decent balance sheet for the country itself. They currently have about 30% debt to GDP, relatively low compared to other countries. The central bank is unified, meaning that, like the United States, there are banking officials that can make decisions with ease. The ECB is a much different animal because you've got lots of different countries that are involved. And you can imagine that there are a lot of weak banks in Spain, Portugal, Greece, the PIGS countries. Well, what happens when they go under? How quickly is the ECB going to be reacting to that crisis should one arise? Right now, it's time to just wait and see what happens. That's what asset managers are going to do right now. Where there's smoke, there's fire. Shoot first, ask questions later. Stay on the sidelines. Err on the side of caution. Over the course of the next 2 or 3 months, they are going to be gauging the backdrop to see if there are any other credit issues. Not just in the United States, in Europe, China, Japan, everywhere. They're going to be looking for those signs. Large banks are also going to be watching order flow very, very carefully to see if there are any other signs. Back in 2008, 2009, as I mentioned, it took a long time for the other issues to surface, about 6 months or so. So I believe the bid to the market is going to be relatively passive. The Fed should tread cautiously here. They have raised rates at a pace that we haven't seen in many decades. There are signs of strain. Take your foot off the brake for 1 or 2 months. See what happens with inflation. See what happens with the banking system. So hopefully they'll do that. Until then, we're in day trading mode. We currently have these long candles back in play. Long green candles, long red candles. We are above and below these major moving averages with frequency. Heavy volume. That tells us that buyers and sellers are paired off. I believe that given the news last week with SIVB, that the bid is going to soften. Asset managers are not going to be as aggressive as they have been, but we'll see. Got the FOMC coming up. So no need to swing trade here. Let's day trade. Let's look for opportunities on both sides. Right now, the market is up about 16 S&P points. Make that 20 S&P points. So we're going to see a nice little pop on the open tomorrow. This 200-day moving average is going to be first resistance. So that is something that we'll have to keep an eye on tomorrow. For any long positions, what we'd like to see is we would like to see the market get through that 200-day moving average with ease. Stack green candles on the open, heavy volume, get through that 200-day moving average. Okay, now we've got a reason to consider some long positions, but until then, we really don't need to have any bias one way or the other. Realize that traders are going to be pairing off positions and waiting for the FOMC. We could see a lot of chop like this. Monday, perhaps not as much as Tuesday and Wednesday, but Tuesday and Wednesday, I'm looking for really dead days. Those are the days that you want to keep your trading to a minimum, especially if we have an inside day on low volume. So let's take a look and see if we can find some stocks. I'll look for a long and a short, and we always want to start on the D1 chart. And we've got our trend lines up. So what I'm going to look for is a stock that has relative weakness on a daily basis, 4-hour basis, 2-hour basis, and a stock that has a bearish ADX on a 30-minute basis, which means Friday at the end of the week, this stock was in a pretty severe downtrend. Okay, we'd like to see that weakness flow over to Monday. I also want to make sure that the stock was below the prior day's low. That is the first support level. I want to make sure that we are below it. I'd like some decent option liquidity. So a rating of -3 or higher, these options will be pretty liquid. Heavy volume today, that would have been Friday. I want to see a stock that had better than average volume with all of this criteria. I'm going to keep the video relatively short right now. These are the candidates that came up, and PTON is one that I really like. And so we'll take a look at that. You can see this is a low minus trend line that was breached with ease. Long red candle, key bar, closing on its low, closing below the 100-day and 200-day moving average. This bar right here may not mean a lot to you, but I know that this was a big rally day on Thursday for the market. What did the stock do? Couldn't even close above the 200-day moving average. Relative weakness. Orange line below zero. Decent volume in here. Piton looks weak to me. Go into the 5-minute chart, see what the stock did. So on Friday, we had this big sell-off in the stock. Yes, it was able to bounce off of that low, but really not able to advance beyond the midpoint of Friday's decline. So that would have been right around the 1025 level or so. At minimum, you'd like to see a stock be able to retrace that. It wasn't able to. So I believe that if the market starts to show some signs of weakness tomorrow, Monday morning, we come in, the 20-point rally that we're seeing overnight stalls at the 200-day moving average. You start seeing the SPY with wicks like this and tiny bodied candles and OneOp starting to crest and roll over into bearish territory, then you're going to know that there is resistance on that initial market rally and that a decent shorting opportunity would be setting up. In that instance, we want to look at Piton and we want to make sure that it is weak relative to the market. So when the market is rallying on the open, we would like to see the stock selling off. So market up, its resistance, stock already starting to slip a little bit. When the market rolls over, we want to short PTON. By the way, I want to mention this. I wrote a couple of extensive articles that I posted on Reddit this weekend. I'm going to have links to both of those articles in the description area of today's video. One of you had asked me a question on position sizing and trade management. Could I get into more detail on that? Well, I actually did get into a lot of detail on that Friday. And what I did was I wrote those articles and I referenced that video as well with those specific examples on ENPH. So please, if you're interested in learning more about trade management and position sizing, check out those two articles. They are going to take you some time to work through lots of specific examples of how this process actually works and where position sizing is in the whole decision-making process. So let's reverse this and let's look for a stock that might be bullish. I haven't run this search, so I don't know what we might possibly find, but we're going to go with a bullish H2, bullish H4, bullish D1, stock above the prior day high. We're going to go with a bullish ADX M30. So the stock closed very strong last week. Heavy volume, all the other criteria can remain the same. And these are the stocks that came up. So I haven't gone through this search, but this is going to yield one of our bullish picks. So let's put this off screen. Let's make sure that we're on that daily chart and let's see what we've got. And I'm going to click through very quickly. And I'm not going to spend a lot of time. This is Adobe, nice earnings reaction. Stock has been strong since that earnings report, above the major moving averages, above the 200-day moving average. Certainly a decent looking stock, excellent volume. So yes, that could work. AEM, I'm seeing a lot of gold stocks in here. We've got a lot of uncertainty right now with credit concerns starting to escalate. I'm not a gold bug, but this is a pretty decent double bottom, higher low, and a breakout through the 100-day moving average. I'm seeing a few other gold stocks in here. We're going to stay away from gold. I can't figure it out. One day it looks great, the next day it looks horrible. This is AMD. This is a really, really nice breakout. I love this. You can see the multiple trend lines that are coming into play here. These are automated trend lines. That is a major breakout. That is a major breakout. When they start stacking, congesting in one price point like this, you want to break through on a long green candle and heavy volume. Voila, we have exactly that. I like AMD. Let's take a look at that 5-minute chart real quick and see what we've got there. So here you can see that the stock tested the upside, compressed, but held all of these big gains. That's impressive. This stock may have more upside. Just going to continue to click through some of these charts, and I'm going to go into the D1 so that we can start there. Baidu, not seeing anything I like there. Coin. This is a nice little breakout. We're right on that resistance point here. Very choppy. Crypto has had its issues recently. This is a nice little breakout here, but the stock rallied up and then pulled back. You can see lots of resistance right in here and blowing through. This is FDX after the earnings, after the close on Thursday. So this looks pretty decent, but I would like to see that stock finish with a green candle, not a red one. So FDX, maybe we've seen similar breakouts like this that look great, and then the stock gradually comes in. So I'm not going to rush to judgment on that one. Google. Google has some resistance here, 200-day moving average, not too crazy about that. Continue to look down. Right now, the stock to beat is AMD. That looked really good. Adobe could also be good post earnings. Mara starting to break through this resistance right in here. MSTR is another crypto stock. OSTK. All right, I think I've got my candidate here. This is pretty nice. This is Riot. You can see that horizontal breakout. You've got your nice breakout here, big volume. Yeah, Riot looks pretty good. Let's zoom out. And this is another crypto stock. Pretty decent looking little breakout right in here. But I'm going to opt for AMD, I believe. AMD and Adobe, those both looked really, really good. And Adobe has been able to hold very, very strong here. It's still got some resistance up above here where AMD is pretty much through all of these resistance levels. So one final look at it. Let's get our bearings. Let's figure out how we want to trade this. We want to see this long green candle preserved for sure. It was able to hold all of the gains last week. This is very, very nice. So even when the market was waffling around, very important point. Why is this so attractive? Because what did the market do on Friday? I know this because I traded it. So when I see a D1 chart and I look at this green candle, I go, that's impressive. Why? Because that's what the market did. The market was down, down, down the entire day, closed below the major moving averages. Well, this stock was able to hold all of its big gains from the previous day. And when the market opened lower, it did not give anything back. So yes, I think AMD wants to continue to go higher. So tomorrow, you're going to have a 20-point S&P move on the open. You want to see AMD take out the high from Friday, and you want it to hold that high. You don't want to see it come back into the previous day's range. You want to see nice heavy volume. When the market ticks up, you want AMD to tick up. When the market doesn't tick up, you want AMD to keep going higher. You need to see that continual relative strength right now. Expect two-sided market action. Expect the action to die down Tuesday and Wednesday ahead of the FOMC statement. You're going to have a very low probability trading environment, and then all hell is going to break loose when we get that FOMC statement. I don't believe that 50 basis points is on the table right now. Market seems to be expecting a 25 basis point rate hike. I think the Fed's got to come out and they have to be more dovish and at least give the market something to work with. Hey, we're going to take our foot off the brake for a month or two. We're going to see how this credit crisis plays out. Give us something to work with. And then I think the market will still flounder around and wait for other potential signs of a credit crisis over the next few months. But I don't believe you're going to see a big sell-off on that type of FOMC statement. But if the Fed comes out and says, there's nothing here, there's no problem here, don't worry, there's no banking problem, we're going to hike 25 basis points, we're vigilant on inflation, we're going to keep on hiking, blah, blah, blah. I don't think that's going to go over well with the market. So we'll see. We don't need to guess. We're just going to wait for the price action. And I'll put a video out Thursday after the FOMC statement. And we'll see how everything's playing out. Right now, keep it short. Keep your position size small. Know that the market is going to be trading both ways. Buyers and sellers are engaged. The volume is relatively heavy. And we are passing above and below those major moving averages with frequency. So we're going to see some movement both ways. Thanks so much for watching, everyone. Have a good night. Please post your comments. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.